Well, there we go. We are live here with John Deaton and Tillman Holloway, as has been the case in the crypto space now for months and months and months. You miss a day, you're missing nearly a month of announcements 3-4 years ago. So we're here to talk about some Coinbase announcements. They had a big conference today and announced a bunch of things, had a bunch of conversations with folks in other industries. We're going to talk about some of the most well-known folks in finance: Paul Tudor Jones, Larry Fink, Ray Dalio, all continuing to push the envelope in terms of bullishness with Bitcoin and crypto at large. So glad to have John here, Tillman here. Let's get started. Tillman, your thoughts on what seems to be the trend of crypto exchanges looking and sounding more like banks, and some banks beginning to look and sound more like crypto exchanges.
Well, I mean, you look at the folks with money. What are they spending it on? And I mean, I am looking at a headline that literally just came out 3 hours ago. USDC stablecoin launches on XRP Ledger.
Mm-hmm.
That's not by accident. I mean, are you kidding me? Ripple's literally the rumor mill has been that they've been bidding to buy. And so now we see behind the curtain as to what's really been going on, interoperability. And you take the amount of liquidity that is USDC and you break that dam open in functionality to Ripple's new stable coin and the piggy bank of value that XRP has to them and their corporate holdings, and the exchange that they just purchased in Hidden Road, and you've got a recipe for a highly liquid, instantly settled, interconnected exchange that the likes of we've never seen before. I mean, it could be something really spectacular. So yes, every exchange is going to end up being a bank because every bank is going to deal in crypto.
Yeah.
Hey, do you guys think,
that's the way I see it.
Do you think liquidity is one of the most important factors?
100% yes. Yeah, absolutely. Yes. If you're trying to trade a particular asset and that liquidity pool is not deep, that turns into problems very, very quickly. So the question then becomes, if you're going to be a bank and you're a crypto exchange, they better look really, really closely at what your reserves entail, right? What does your reserve book look like associated with a USDC, associated with whatever stable coin you've got on your exchange? What liquidity pools exist for the likes of Bitcoin, Ethereum, and others? That's going to be a huge deal.
Let me ask you guys. You guys are smarter than me on this stuff. A lot of people view RLSD, Ripple stablecoin. Why would they, have USDC on the XRP ledger? And aren't they competitors? Any comments on why they shouldn't be viewed like that, and it should be viewed as a more bullish thing?
Yeah, absolutely. So interconnectivity of markets allows liquidity to flow from one market to the next. And there's incredible value in that. There's diversification value, there's arbitrage value, there's, just access to new opportunities and new ROIs that aren't attached to specific chains. So connecting chains in specifically stable coins is very, very valuable. If you ever use stable coins and you're on a specific platform, for example, when I trade meme coins, the fact that they don't take tether, and if I have tether, I can't. There's just a lot of friction is the best word in not having that connective tissue. Number one. Number two, USDC and Ripple's stable coin are going to serve different functions in the market, right? I think Ripple, what they're trying to do is prove their own use case, and having Hidden Road as the foundation. Look at who else is building tokenized exchanges. Citadel, BlackRock, they're both partnered in one in Texas. So that interoperability of having the tokenization of assets, what did Kraken just launch? Tokenized equities.
Right.
Everybody is doing this. This is the game of the future, is like where Tillman Holloway can go and log into my Kraken account and trade anything I want 24/7 with leverage, and I can cash those profits out and I can roll it to any other entity. And the more entities I can roll it into to play other games, the better. So for example, if I wanted to day trade on one against a certain pairing, and then I wanted to take profits off the table and put it into DeFi and stake it, then I could do that all across one exchange. That is going to be the next Disney World of financial services platforms. And, anybody who gets there first is going to reap the benefits of it as being first market mover. And that's exactly why, if you think about it, Robinhood bought the crypto exchange WonderFi in Canada, right? It's all the same thing, connecting customers.
It really is something to watch the speed and pace at which we're going in crypto right now. Every single day there's a new announcement, and that announcement is stable coins, or that announcement is a new credit card. That announcement is, continued adoption with more flows into this, that, or the other. Treasury types of movements, not just with Bitcoin, but with Ethereum and XRP and Solana. Again, there are so many announcements that it's borderline difficult to keep up. It really is. And so
you got the president talking about crypto like on a weekly basis almost,
Well, he was on a live stream with the Coinbase conference that was happening. Something that's probably a bigger deal. We'll talk about the Coinbase credit card here shortly, but here's a bigger deal. And I don't know if you guys saw it, but they had the CEO of Shopify at the Coinbase conference. And the Shopify CEO said, we're going to begin to take stable coins as payment, right? So I don't know. I mean, I think you guys know this, but something like 70% of all small and medium businesses across the US and globally, Shopify is the platform that they use. Like, Shopify is a massive company that does enormous amounts of commerce every hour, every day, right? So that is a huge announcement. And again, that's a huge announcement for Coinbase. It's a huge announcement for USDC. That particular type of announcement 3 years ago would have sent the entire crypto market cap up significantly. Not even a blip, not even a quote unquote ripple. That was well done by me, right? Well done.
Well, I think, to your point, I think the stablecoin bill is probably, a lot of the people in the know were getting ahead of it, knowing that we're going to pass something. Yeah. And, if you're the smartest people in the room and have that access, then you start to get ahead of it from an infrastructure perspective to make stable coins kind of, your primary driver. Why? Because it makes you a bank instantly. Based upon that bill passing, you are now a bank if you function with stable coins, because they're defining what stable coins are. And Dave did a great job on Melker's show with us defining that. But for the viewers, like, the stable coin, the bill that's going to be passed is going to define it as something that is on par value with the US dollar. And so the instrument of the US dollar in the form of treasury bills will have to be a component to the value of that stable coin. That's good for the US dollar. That's good for the US economy. That's good for frictionless movement of money on these platforms. Like, and even John knows this. I'm high on Flare. Full disclosure, I do own some, and I like it a lot. And guess what they did? What did they open up to have a lot of money in the first 4 days come on to total value locked? They did a stable coin, right? They tied it to the, what is it? The USDTO or zero. Yeah. So, this is the way that you connect to the deeper ponds of money. And the fact that USDC is backed by treasury bills, and Ripple's stablecoin is not backed by it, but it's backed by equally potent collateral, the
Right.
XRP that they have and the billions of dollars they can put as that offsetting collateral. So they're doing exactly what Flair's doing. They're marrying two assets to produce a new asset that has, you know, smart functionality and instant settlement, and that will be the ecosystem that they utilize to kind of dominate market share.
And I think people need to understand that as these stable coins grow, they buy the U.S. Treasuries as their reserves, and that's why it drives demand for the U.S. dollar, and it's good for the U.S. economy. It's good for trying to refinance our debt, all of those things. Yeah, listen, I was lucky enough to, you know, even though Link2's got some bankruptcy issues coming up, but I bought Circle. I didn't buy enough, of course, right? But I bought, you know, I think I bought like 750 shares of Circle at $32 a share pre-IPO. And it's, look at it. I mean, I don't think Circle's balance sheet and earnings justify 22 billion, or no, 29 billion dollar market cap. But I think that shows you the excitement. I heard that, you know, Kathy Wood, BlackRock, they were all talking about buying a buttload of Circle shares when it IPO'd. And so I think that the stablecoin legislation, you guys are 100% on point. I think it's got the entire market rolling.
By the way, buttload is a trademark sort of deal for Gen Xers. So John Deaton and I both, you know, hardcore Gen Xers. Buttload's definitely a trademark of that generation. Yeah, I mean, so that's the point, right? So Circle happened last week and just absolutely skyrocketed, you know, 300% to the upside of the offer price on the day of the IPO. That demand associated with access to quote unquote crypto assets in the crypto ecosystem, when there are, you know, sizable amounts of institutions, both in the US and globally, who can't just go out and buy spot Bitcoin. That's the kind of demand that finds its way to an IPO like Circle. That's going to push other IPOs. So people that don't understand how TradFi works, right? So there's probably another 10 IPOs associated with crypto that are on the dockets of, you know, the
Gemini.
the IPO slate. Well, what will happen is this: those IPOs will now be moved up. They're going to come out faster than they would have with a normal calendar associated with that demand. In the same way, if Circle would have come out at $26 and traded down to 24 on day one and traded down to 17 on day two, all of those crypto IPOs would have slightly inched back instead of moving up. So the slate of IPOs that are, again, look, Gemini, you know, announced that they filed all the paperwork, they're ready to go. That happened 2 days after Circle skyrocketed, right? So again, that's the calendar moving up because of demand and performance. So when does that run out? When does that demand and performance, you know, exhaust itself? I don't know. We're going to find out, but it's probably not going to happen in the next 2 or 3 crypto IPOs. Those are
Well, I would argue that it's not going to run out, and here's why. Because the printing press has to find a place to place those dollars.
Yep.
The M2 money supply is going up. It's going up exponentially. Why? Because the debt service requirements that we have are going up exponentially. We're on a curve to service $40 trillion of debt every year. How do you service debt? Well, if you own the printing press, you print more dollars and you service the debt with cheaper dollars. And that's what we're essentially doing until we come up with the next innovation that changes the world, and we can refinance all of that on the GDP globally that we produce. Computers were that for us, right? The internet was that for us. You know, music and movies are that for us. Blockchain is that for us, and digitizing assets in the form of tokenization is that for us. We can seize this moment in time and reposition the US dollar, not through might, as the place where everybody wants to have the deepest liquidity pools because it moves around the easiest with the less friction, quicker, and you can capitalize on these types of intense opportunities that only present themselves for tiny periods of time. And I think we all have a little James Wynn in us. I think we all like to think about the home runs, the here's a guy who kept playing perps to the point where he had $1 billion bet on and he couldn't shut it off, and now he's broke again. I mean, only in America. I mean, that is well, but I do think that we've conditioned ourselves as a society to want more and more of that, and that's why Bitcoin is kind of such an answer to getting people back involved in the markets, because there is so much demand for the instant magic of a 10-20% day that can happen any day of the week in crypto, but really up until this point you hadn't seen it in the TradFi spaces.
I don't know if you saw my post. I did a post, I don't know, about 4 days ago, and it made a lot of noise, Bitcoin Magazine and a couple of the other media outlets, because I didn't think it was that controversial, but I basically said that I thought that, I won't say better because I got it at a lower price, obviously, but I think buying Bitcoin, the case to buy Bitcoin or even XRP at $2 is safer. And there's a better argument to invest today than when I invested at 19,000 for Bitcoin or 42 cents for XRP. So I don't know if you guys agree with that.
I'll give you a perfect physics analogy is, are you more likely to survive a crash the lighter your car is, or are you more likely to survive a crash the heavier your car is? The answer is the heavier your car is. The more liquidity that's in a market, the safer it is against catastrophic risk. It's Bitcoin going to zero right now is exponentially orders of magnitude more difficult than it was even 2 years ago, 3 years ago, before Larry Fink started being the CMO. You do have risk of failure, because imagine if those same forces that now find themselves on our side promoting Bitcoin as a safe haven asset, imagine if they were opponents on the other side taking hard stances for all eternity and never coming over. Well, that's a tough road to hoe. You never know how long that growth curve is going to take. And, it's just, it's a different story than what's been told. So now I absolutely agree with you. And I heard somebody say it like this. I'll tell you who it was. It was,
Andrew Parrish. That's who it was.
No, it wasn't. It was Fred Krueger. He said, Bitcoin has been de-risked. It has really, the risk as a risk on asset, you couldn't be buying at a more riskless time. So, yeah.
That's absolutely true. When you have, I've said this a bunch of times. There's very few people in the world that started out as money managers / traders and became billionaires. You can count them on about maybe 2 hands, but probably more likely one. And one of those guys is Paul Tudor Jones, and the guy just keeps pounding the table associated with Bitcoin based on where he thinks sort of the global markets are going to go, and the global economic story is going to go. Dollar going to be a little bit more debased. Inflation will be a little bit more persistent. So his thesis is Bitcoin, gold, and some specific stocks that he likes. And that's been his particular thesis now for a good 6 to 9 months, and it's been right. So to your point, Tillman, to have somebody like that be very anti-Bitcoin makes the asset riskier, right? Because they have huge bullhorns that they can sound their message with. Anytime they want to get on CNBC or Fox Business or Bloomberg or otherwise, there's an open door for them to do it. So for them to be positive about Bitcoin and crypto overall is the de-risking of the asset class in and of itself. So that's absolutely the truth.
I mean, we could talk about Ray Dalio. We could talk about obviously Paul Tudor Jones and
Larry Fink.
Larry Fink. But, I think all you got to do is pay attention to the U.S. Treasury Secretary. I mean, just think about that. We're talking about the Treasury Secretary of the United States.
Yeah.
Saying that stablecoin market cap will be $2 trillion.
Yeah.
Within a few years. Right.
That's insane.
And by the way, the U.S. Treasury Secretary could end up being the next, chairman of the Fed. Right. So, these type of statements can't be erased. So they must be, the kind of positions that he's very, very comfortable with and will stand the test of time. So we're watching, I'll go back to like Coinbase, and they're offering a credit card, and they're offering it from American Express. Like, folks, you want to talk about the rails of finance being connected and directly injecting continued liquidity into the crypto space. It's literally happening every day. And so Coinbase, the question is there a market on Polymarket for at what point in the future does Coinbase get a banking license? Like that has to be on the roadmap.
Well, it would be north of 90% because Kraken's already done that. They were the first to figure that out, and they actually were way ahead of everybody else and ahead of the curve. They got that like 3 years ago, and they realized the future is going to be us being a bank, and that's why they're in Wyoming, because Wyoming was so favorable in helping that happen.
Also, another thing from the Coinbase conference today is Coinbase's perps, their perpetuals, are coming to the United States. Like, they announced that they're coming to the United States, which, if people don't know this, that's where the real size, liquidity, and volumes are in the crypto space. That's where big boy trading happens, which, by the way, same thing in TradFi markets. And what are perps? What are perpetuals? They're just futures, if you want to use TradFi terms, for crypto, right? They're futures.
Well, let's the big elephant in the room is why is more money traded? Because you can have perps up to 100-to-1 leverage, literally. So you can bet $1, and the exchange gives you credit for 99, and you get to go into the market as if you've got $100. The hard thing about that is that if it moves a half a point or 3/4 of a point against you, the exchange doesn't want to lose their money, so they liquidate you, and you take a 75% haircut. That's but that's why people love to take those types of bets, because it takes a little bit of cash to go a long way if you're right. But it's like trying to time the ping pong ball on the floor. It's really, really hard.
Yeah, I don't know if you guys know who Greg Kidd is, but he was one of Ripple's early employees. He used to work at the Federal Reserve. He actually bought a bank, and he's buying a second bank in Spain. At the XRP conference, he predicted that all the major exchanges would eventually do what Andrew's talking about, which is get a banking license.
Yeah.
And so
the question is how quick can they approve them, and does the Stablecoin Act make you one by default? Because I guess if the US dollar is a stable coin, the stable coin's the US dollar, then by holding stable coins, you're holding US dollars, which makes you a bank.
Well, nobody has the inside scoop on the all things happening in the banking world other than Caitlin Long, and she flat out told us at the Bitcoin conference at the Arch Public Lounge that the list of crypto companies and exchanges that are waiting, that have applied for a banking license, is very long. It's a very long list. So they're already in the queue. It's just a question of when does it happen? And again, we've gone from the narrowest of lanes associated with crypto, where basically the Bitcoin ETFs and Ethereum ETFs were the only approved legal things you could do with crypto 18 months ago, to now just complete wide open spaces, as if everybody's got a flag and they're standing at the edge of the west of the United States, and everybody says go, and then you just run out and claim your stake. That's where we're at in the crypto space from a regulatory standpoint. So it's fascinating. It's fascinating to see where will companies go? Why will they go there? What will they do? What well-worn pathways will they take? I don't know where I heard it, but there was an analogy used that oftentimes, well-worn treads can often become a box, right? Because they're walls that get put up. So will there be companies that will take those treads and become a bank because, okay, this is how it's done? Are there other versions of things, and where do we go and where do we head? Is it something where BlackRock's on the cusp of not doing, taking the tread line, and now they're opening up, 24/7 trading, and it's tokenized, and it's stuff that we haven't even figured out yet, but they're trying to figure it out.
Well, let's take a page out of JP Morgan's playbook and say they are a bank.
Yeah.
And what have they started to do with crypto? Offer it use it as collateral. So
Right.
there you have it right there. Why would they do that? And what's in it for every other local bank that's at the corner for adopting these types of programs, just like American Express? Why are they doing it? It's adoption rate, and the amount of money that's going to be invested in crypto through these passive, channels is going to drive so many people into the space. It's going to be insane. And it's the simple stuff that gets your attention that you really, it's hard to get my attention. I got a lot of things that I focus on, but one of our employees, Daniel, he posted something that got my attention. And it was the fact that he had earned $3,000 he posted his Gemini Earn credit card report. And it was, I've earned $3,000 in crypto, but because Bitcoin's done what it's done, it's worth 14 grand. And I just sat there and thought to myself, like, that's the cinch by the inch, hard by the yard. If you just get in something and you do it a lot for a long period, it takes care of itself. It really does.
Guys,
And
I stopped using my platinum Amex card, and I'm only using it. And I we were on stage. Andrew and I was at the Bitcoin conference with Paige Ed and what's
Natalie.
Natalie, Natalie, and I got to call him and be like, listen, you got to up my my credit limit, right? Because I mean, it's sort of like when you get the emails from from Gemini and from TradingView, because of the algos, the Arch Public algos are trading. You kind of get a little bit addicted to it, like
you do.
It's like, hey, how come I haven't got an email? And you just want to start using that card, and so the fact that you got Amex is big. I mean, Amex is as conservative as you get, right?
Yeah, for sure it is. Well, I mean, listen, one of our employees, as soon as he saw that, he's like, I'm going to use this like crazy. We put all of our monthly expenses on American Express already. So I'm going to earn an additional 4% of Bitcoin by using this card. I already use it. So I'll just add the Coinbase version of it. I'll just switch it out. And now I'm compounding on top of the spending that I do on a monthly basis. But that, again, that's to a larger point, crypto exchanges. And again, it's so crazy to think of where we were 4 or 5 years ago, right? So 4 years ago, 2021, 22, there's all this commentary and the reality that the Binances of the world controlled Bitcoin price, FTX, and everything that went on there. We now have a place like Coinbase, and American Express is comfortable enough to give them a flagship product because they want access to their customer base. That's what they want. They want access to those customers because they've had conversations with Coinbase. Coinbase has said, this is what our customers look like. This is their avatar. This is how they, this is what their spending lives look like. What do you think? And Ameriprise is like, sold. Let's put a partnership together. That's a pretty remarkable thing. Again, Robinhood has their gold card, which is their credit card that again does the same thing. It's 3% cash back, and you can put it into whatever you want, right? So Robinhood, Coinbase, Gemini, all of them are going to have a card.
They're all going to have it.
I have a prediction to make based upon this conversation, and it just popped into my head. I think they're going to have to remove the traditional credit scoring system if they want to issue as many cards as they could issue. I think that they're going to have to go to a wallet balance or a crypto net worth credit scoring system to really get the necessary integrations that they're going to be looking for. And boy, would I love to see that whole thing overhauled. That is a racket if I've ever seen
Absolutely.
one. It's unbelievable.
What Andrew just said too just made me think what we're seeing every day with Bitcoin Treasury Company, right? We're starting to see XRP Treasury companies. I don't know if you've noticed that. We're going to start seeing all these credit card companies. I'm envisioning a JetBlue card. Instead of points, you have an option to get Bitcoin or other crypto. So I think that it's going to spread. Significantly.
Yeah.
Well, let's talk about for a second that headline, because I think it was a pretty overlooked announcement that has massive implications. But Michael Saylor has obviously paved a way and shown us that there's this new type of publicly traded entity that can produce almost zero, if not zero, cash flow, and can be a total zombie company. But they can borrow against their share price as long as they promise to buy Bitcoin with it, and that creates this kind of infinite debt money loop where that drives your share price up, which gives you more borrowing limits, which allows you to buy more Bitcoin, and you just go around and round and round until it's the big pie. XRP is being held $100 million worth, isn't it, John?
Yeah, Vivo.
Vivo.
Vivo is putting 100 million. They're working with Flare, and to also generate yield on Flare. But then there's another company that 500 million worth. Of XRP. So just since this last week, just with XRP, we've had two announcements totaling 600 million, from two different companies that are basically XRP treasury companies. And Joe Lubin, a Consensus, is creating something where there's going to be Ethereum, basically same concept with Ethereum. And, what that means is these assets are going to be held and bought, not sold, which means you're going to see price appreciation.
Well, and the really big distinction between what Saylor's doing and what this, by the way, is it Vivint, something like that, but it's a publicly traded, NASDAQ traded company. It's a solar company, and I don't think the solar piece of it's doing so well now, but I think it did have its heyday. And I think that them doing this XRP thing is to prove a point that the XRP that they're going to put on the Flare network, they're only putting it there to generate yield. They're literally going to be the first publicly traded company that has a large stake on a stake network. They're going to be staking their XRP for a yield. That's the first of its kind. No one's ever done that before. And to see it play out the way that I think it's going to play out, because I've used the technology extensively and I know it works, I think we're going to have a more attractive model for public companies to work off of if they understand that they could take their Bitcoin holdings, create an FBTC asset and stake it for yield versus just holding it,
and then cut dividends.
Well, that's what I mean. Cut dividends, or let it accrue year to year over a long period of time, like an oil well does, and then prove reserves. This has been producing for 12 years at a steady clip of 2.5% a month. What does the future value of this look like? What's a multiplier on that look like? You know what I mean? And that coupled with the price appreciation of the base asset because it's being utilized, I don't see how it misses, to be honest with you, but that's just.
No, I'm glad you brought that up because I think it was underreported. You know what I mean?
Yeah, for sure.
And also, I don't know if you saw it, but Ripple must feel pretty confident because they just did a buyback of their shares in the secondary market at $175, and those shares 2 years ago were selling for $40.
Yeah. Yeah, I think they are confident, and I would be too if I was sitting on that purse. So it's a lot of weight to throw around.
But to me,
and Brad Garlinghouse, he joked. He goes, he said on XRP stage, he goes, look, Ripple didn't bid 20 billion for Circle. He didn't say how much, right?
Right.
But
yeah, well, now that this news comes out with like the USDC partnership and integration, maybe there wasn't a bid because, you know, maybe it was all about the integration piece.
right.
Yeah.
Well, the truth of the matter is, whether, you know, wrapped in this, wrapped in that, again, I think we're seeing the first fruits of the fact that traditional finance is going to offer versions of products like that in the future, right? So if there's enough demand coming from a certain subsection of consumers, banks and brokerages will recreate it themselves so they can make more money off of it. We've seen that with tech for all time, right? Something interesting and cool is done by a smaller entity, and that interesting and cool is then done by a more trusted type of organization for consumers. So my guess is again, over the next 2 to 3 years, the ecosystems that are built around Bitcoin and crypto at banks, brokerages, and the like, most of brokerages are banks anyways now, they're going to sound, feel, and taste an awful lot like stuff that was happening in crypto in 2018 to 2021. It's just going to be interesting to watch, because people in crypto are going to be like, well, wait a minute, it's going to be like, you know, Kramer and Calvin Klein coming up with the beach, you know, cologne. Like, he thought of that first. So all of us are going to be Kramer, like, what's the deal? You smell like the beach. I thought of that first. Calvin Klein stole that from me. And then Tillman's going to be on a billboard in Calvin Klein underwear, and it'll all come full circle. You know what I mean?
Guys, there's someone watching right now that is wondering, well, if everything you're saying is on point, what you guys are talking about, and if the future looks so bright, why isn't Bitcoin, with all these announcements, why isn't Bitcoin already at 150?
There's an easy answer to that. There's a really easy answer to that.
I knew you had it.
Yeah, there's a lot of people that bought at 3, 7, 8, 9, 10,000 who are selling at 100, 105, 108, 109. It will always be the simplest answer. Why isn't Bitcoin going higher? Because there's as many sellers as there are buyers right now. So BlackRock is buying from somebody for their clients that are buying inside the ETF. Same with Bitwise, same with Fidelity, same with all of those. Whenever they go out to buy Bitcoin, someone is selling it to them at these elevated levels. Because think about it. If you bought at $7,600, you know, and you're now at 107, as we were earlier today, that is, depending on your stack, that is generational, life-changing money. Everybody has a price that they sell at, right? And there's a huge amount of people that I bet you thought, because one of the true believers in Bitcoin of all time, Max Kaiser, he's a bit of a wacko, but even he said today, he kind of admitted what his price was. He said, all the other proclamations are interesting and all that stuff, but this was me. Back when Bitcoin was at $100, I said it would go to 100,000, and he, you know, quote tweeted one of his posts saying it would go to 100,000. That's his subconscious admitting that
he sold.
I thought that was crazy back then, but it's actually here. So what do we do now? And so there's a huge amount of folks that are selling. That's just the truth of it.
Well, I think it's a little bit deeper than that, and I'm probably a little more cynical about it. But, you know, if you are an institution and you have to accumulate in order to be a bank, you know, if you're wanting to be an exchange and you're not Ripple and you don't have XRP that's worth billions of dollars, you have to go out to the market and acquire it, right? And so how do you acquire it? Well, you create a lot of volatility without the price and suppress the price. So, you know, my dad, I grew up, you know, with a gold bug in the house. And he used to talk about, as long as I could remember, if everybody would just call for delivery on their silver contracts, the COMEX would fail, and the price of silver would instantly go to $1,000 an ounce. That literally, I heard every year that get bigger and bigger. Well, here's the truth. He's right. If 5% of the people that were holding silver's paper turned it all in and said, give me the physical, it would all collapse in one fell swoop. But guess what? Less than 95% of the people want to hold the silver. They want to trade the paper. They like that. That's how they make their money. And so I think, the point of Wall Street getting in bed so quickly with Bitcoin is that they've already put the control mechanisms in place. And I'll give you a statistic to back this up. There was 8 times more money represented in the futures Bitcoin market than in the actual spot market. So is that the tail wagging the dog? Yes, it is. Can they manipulate the price and suppress the price and keep the price down while still shaking the tree and getting, like Andrew said, a lot of long-term bag holders to go, man, how rich is too rich? You know what I mean? It's like, if you're in from the beginning, you own thousands of Bitcoin. Well, probably time to put it in something other than just Bitcoin. Anybody will. And so I just think that this is a byproduct of them having control of the market and them shaking the tree for as long as they can while still kind of keeping an upward 45-degree trajectory. And I think that they know that Bitcoin naturally wants to gravitate towards that 45-degree trajectory because of its perfect supply demand dynamics. And if you look at several of the power curves attached to Bitcoin, it's just simply like user adoption. Bitcoin wallets over $1,000. If you correlate that to the price, they're perfect. They're spot on to one another. So they just realize that over time they're going to be able to put a lot of money into this market, in untold amounts, and it's going to be stable because Bitcoin's done with its job. We're 95% complete with the inflationary curve. It's never had a flaw in it. We've lost more Bitcoin than we have left to mine. Like all of the things that they're looking for as a stable market to build off of, Bitcoin intrinsically has proven over the last 16 years.
And to that end, like I had a conversation with an arch public client today, and he deals in watches and has for a long time. And he told me, yeah, back when Bitcoin was new, and this is how I got into Bitcoin initially. I had a watch and it was an expensive watch. And somebody offered me 200,000 Bitcoin for it. This was back in like 2011, 2012. And he says, he's like, so the example basically is there are people out there that ended up that had 200,000 Bitcoin in 2011 or 2012. And so what do you think they're doing at this point? If for somehow they held to 100K, they're like, yeah, sure, I'll sell 100K to some dude on the OTC exchange at Kraken and keep another 100K, no problem, right? So to me, it's supply and demand. Is there a bit of future stuff? Sure, there's some of that, but it's mostly supply and demand. And oh, by the way, just remember, that 18 months ago we were at like 27K. So we have made a material move to the upside. You know what I mean?
At some point, shaking that tree that Tillman talked about, nothing falls out.
Right. That's right.
At some point, they say, "Okay, I'm done selling," and then you already have more buyers than Bitcoin on a daily basis, right? Yeah. The IBIT and Sailor and all of them. So, do you think there's people talk about a God candle? Do you think that
I don't think that happens anymore. I think there's buying and selling zones that have deep liquidity in them. And I think 100,000 was a big psychological level. And it took they could shake the tree at that level for a very long time because everybody was thinking, oh God, is it going back down to 50 every time it would go into the 80s, And so there's more power to to shake the tree, and more fruit comes down when there's heavy psychological barriers like, a six-figure price tag per Bitcoin. And guess what? It's been normalized. How many tweets have you seen over the last couple days? Bitcoin's been over 100,000 for 45 consecutive days, or and sure enough, before it, 100,000 is going to seem like a deal to everybody, and it'll go up to the next liquidity zone that they can shake the hell out of the tree again, and it'll just keep doing that until there is no liquidity above there's no more liquidity to go to, and then you have a big crash and it starts going down to liquidities, and they want to create stories at every liquidity zone that make you wonder, is this a bounce or is this a crash? And you get caught up in that tizzy and in each one of those instances. And most of the time you're never right, because you really don't know where that liquidity is.
Right.
Yeah, it is to me, I think Coinbase held because it didn't leak. There was no leaking of Coinbase and Amex at all from anywhere. Nobody had it before they actually announced it. So they kept that under wraps. And again, that's such a huge deal. American Express is as long-standing a financial institution in the United States as really there is. It's been around for 100 years in different iterations, and has done so much, and is seen, whether rightly or wrongly, as a bit of a halo company in the world of personal credit and credit cards. So again, I think that's in a lot of ways it's the news of the day, and it's a a huge headline associated with the maturing of Bitcoin and crypto at large. Again, Coinbase had this conference today, and just from the one-day conference, President Trump did a live stream for Coinbase, American Express announcement, Shopify going to be using stable coins.
That's
and
huge.
The headlining interview was Brian Armstrong and Jeremy Allaire from Circle and USDC. So that's all inside of one day. It's borderline as good as the Arch Public Lounge at the Bitcoin conference and all of the the folks that Scott Melker talked to. So no, it's again, it's extraordinary. There are there negatives with Coinbase? Sure. Are there customer service issues with Coinbase? Sure. Are there issues politically to some extent surrounding a bit of Coinbase? Sure. But man, have they built a big gorilla of a company. Huge customer base, and all of the plugins and the rails that they continue to build on. It's truly something.
I will go on record. Go ahead, John.
I was just going to say, I think Coinbase is the Sears, and I mean, hopefully they'll have a better future than Sears. But how Sears and Roebuck, like the foundation of a Bank of America, or something like that moving forward. Go ahead, Tim.
I was just going to say, I think the thing that's really struck me since the Bitcoin conference is this appeal to have Bitcoin on your balance sheet if you're a private company. And what that does, just like American Express, it's this rising tide floats all ships, where there's constant buying pressure based upon a treasury strategy being deployed over a 12-month period, and that naturally is having them DCA in, and or people earning rewards, which forces American Express to go buy crypto, and rising tide floats all ships. But the thing that I think is going to boggle people's mind, what's the hardest thing to do when you have a lot of money? It's to place it with a good return. The bigger the amount of money, the harder it is to place. And where do the largest pocketbooks look to place their money? In VC deals. The money that drives innovation is VC money. That's the name of the game. And so if you talk about a plumbing company that is got 100 plumbing stores and they don't have a Bitcoin strategy, and one that has 100 stores that does, and that plumbing company is accruing 20% of its net profits and investing it in Bitcoin, and it has a very good customer base and a good growth curve, how much more of a multiplier and how much more risk capital in the form of loans for expansion is available to that second model? Well, if I'm a VC company, I'm going, well, this is a way for me to have vending machines everywhere in the United States that pays me in Bitcoin. And if the business fails at some point, I'm going to be holding one hell of a bag of Bitcoin that could equate to more than any exit event that I could have had on the traditional business front. I think that is going to absolutely open up the capital spigots, because you can go acquire huge swaths of pretty vanilla companies with small margins, inject a Bitcoin strategy, and make them disproportionately competitive to everyone else. And then you just do roll-ups and you buy as many of them as you can, and you can wash, rinse, repeat. I think the spigots are about to come on like we've never seen, which is what Donald Trump wants, right? Innovation in America. Come to America and build a business. And if we can master the digitization and the investment treasury side of Bitcoin for private enterprise, middle class changes more than anything else we can do, in my estimation.
Are you saying that founders should be prepared to answer what's your crypto strategy?
I think founders are going to be forced to answer that, and I think if they have a lackluster strategy and someone else offers one that's better, that will be the difference maker as to who gets the money or not.
Yeah, it's reminiscent of, let's call it the mid 2000s, and when there was difficulty in the economy and venture capitalists, private equity firms were buying up really, really struggling companies. What was the way that they valued those companies? It was effectively either land or building or something, right? It had almost nothing to do with the profitability of the business. It's what's the underlying asset or assets here that if we have to liquidate, what's the value there? That's what we'll pay for. And, to that end, Bitcoin is immeasurably more valuable as a base layer asset than how
this
much
kid pulled the plug. He's
how much
running the
square
scooter
feet do you have in the building that you own, right? Or how much land whatever it happens to be. That's impossible to liquidate given whatever circumstances are in the economy versus Bitcoin, which you can liquidate instantly.
You cut out during that, but I've talked to you enough. I know what point you were making. He was making the point that Bitcoin offers a level of collateral that no other security can offer in the event of a default. Then that's a better lending platform to lend against, basically.
Well, I believe that covers it here today. Coinbase and American Express. John Deaton and beards, and Tillman Holloway and sweatshirts.
I'm gonna get an orange hat. Put these glasses on.
Yeah, that's right. That's right.
I'm gonna stop dyeing this. Okay.
It looks like you have a little bit. We got a little gray.
Listen, I got a lot. You know what I mean? Someone asked me one time, "Hey, do you dye your beard?" I go, "I'm 58 years old. What do you think?" I'm not gonna...
Yeah, I got tape behind my ears at this point, pinning my eyes back. Anything I can do to help. We gotta make ourselves appealable on these podcasts. It's pretty ugly looking at the three of us if we don't.
Well, I appreciate everybody that joined us. Reach out to Arch Public, archpublic.com. Happy to help you. Our software is free. The work that we do, we want everybody to have access to institutional tools for retail folks and stay ahead of the curve. There is no question that large, big feet and big bodies are coming to this space and coming in a significant way. So get ahead of them and use the tools that they're going to use to acquire whatever it is that they're going to acquire in the Bitcoin and crypto space. So,
and I'll leave you with one thing. John mentioned Sears earlier.
Yeah.
Imagine if Sears had acquired 10% of their net profits in Bitcoin from the dawn of time to now. What would their story look like versus now? It would have been a total game changer. They'd own more Bitcoin than Michael Saylor does. So, these principles are the time to act is now. Arch Public loves to crunch numbers and put proposals together. If you own a business that's thinking about, I wonder what a Bitcoin treasury strategy could do for me, we will do all the heavy lifting and crunching numbers, no charge. Reach out to us. We're very passionate about this. We want everyone to kind of have the light bulb moment that we've had. It will change your life.
All right.
All
Have
right,
a good
guys.
night, everybody.
Have a
We'll
good
see
one.
you.
See you guys later.
See you,
bet.
John.